What's good? What's good? How's everybody going? I mean, doing, Jesus Christ. Um, really today, make this video short, going over some of my students' profits today. He said that US 30. Looking at some of my students' profits, seeing what he can work on. Oh gosh, this guy is actually getting really closing. Wow, look at that. Look at that. So just looking at some of my students' profits, trying to see what he needs to work on. Obviously, this is definitely a big minor gap right here. XPR, I'm going to probably tell him XPR is not a good trade or a good currency pair he should be trading. Let's take a look at some more. So yeah, just looking at his accuracy, looking at what he got a lot of pairs on here though. I will say that there's a lot of pairs, a lot of mixed match pairs that even move together. Like I don't know why he was selling and buying this one. They actually moved together. Don't know why he was selling this one and then buying this one, but you know, selling this one and then, well, actually he did get on back to selling GPB USD and GPB JPY. They actually moved together, so that was smart. Otherwise than that, just looking at all the trades, I would say all his trades are pretty accurate and pretty decent. I would definitely say that he'll probably need to cut down to maybe gold or GPB JPY or S&P. I mean, that's what he told me he likes. But looking at his accuracy, I would say his accuracy is more or less in the GPB pairs. And I mean, so far that's so much data I've gotten from him. But this is something I also do in my free time. Just look at my students' profits, seeing how they're progressing, seeing where they are at with the trading and what they need work on. Really, what do they need work on? What are they going to improve? What they're good at, you know? Because it's another thing to really know what you're good at, but it's another thing to know what you're not good at, you know? And I think that's the most important thing when it comes to learning how to trade, guys, is it's really knowing what you're not good at and what you're good at. You got to have to know both. You can't just know one, because if you know one, you tend to stick to that just a little bit more. You become more comfortable with it. But long story short, guys, this video is going to be all about entries. So entries part 2 is going to be the name of this video. Basically showing you guys how to have proper entries and exits as well, because that to me is the most important thing on being a trader. You have to know when to get in and you have to know when to get out. If you don't, you can honestly have a hard time and a very frustrating time when it comes to Forex. So enough talking. Let's get to it. This is our course right here, Sniper Pro course. I actually just deleted the rookie course. Now, in my personal opinion, I just didn't see the benefit of having a rookie course. So as you guys can see, it's all pro. If you want to become a trader, there's no rookies, okay? No rookies. Because in my personal opinion, the reason why I took out the rookie course is because, number one, I mean, guys, you guys are getting 3 courses in one for $1,000 USD. Most people think, oh, that's overpriced. There's traders out there who's charging you maybe $3,000 for their strategy. I know one guy who's charging $10,000. One of my homies, Relentless Trader, if you guys don't know who he is, follow him on the ground. Relentless Trader, he's charging damn near $10K for his strategy. So in my personal opinion, $200 monthly, you're paying that for IML. Most people, I know a lot of you guys who came from IML, and you guys can't sit here and say that IML is teaching you what I'm teaching you, because it's not true. It's not true. It's not happening. And I know this because from experience and from other people as well. Many of my students actually came from IML, including myself. So I know how it goes. I know how the game goes. I know how the gimmick goes, and I know what IML does. Like I said, nothing against IML. You know, they're actually a decent company when it comes to marketing. But like I said, if you want to become a trader, you have to step away from all the calls. You got to step away from all the events. You got to step away from all this talking and actually do some chart work. That's what's going to get you better is chart work, chart work, chart work. Spending 4 or 5 hours daily as a beginner on the charts. Now, I know that people are like, well, that's ridiculous. Why would I want to spend 4 hours? You can minimize it. That's just me saying that because that's how much time I put in. I put in about at least 3 to 4 hours daily on the charts. Now, why do I do that? Because I am a different learner. I learn more slowly and I learn more hands-on. So a guy like me, I have to spend 3, 4, 5 hours daily in order to get the results I want. And I would just say that the best years of my trading career was definitely this year and somewhat last year. Like last year was kind of more or less the start because that's when I think I started taking these forex just a little bit serious. I started really in like late 2018, like around September, but I wasn't serious until 2019. So technically I've only been trading for about 2 years. So from 2019 till now, and we're about to reach 2021 anyway. So that's 2 years in my eye. Most people say a year and a half, but 2 years in my eye, because I didn't start taking forex seriously until 2019, like I said. And I started seeing some results from going from mentors, paying from IML. I had a few mentors. I took Q's course. Q Banks is actually on my Mega. You guys get this when you guys sign up with us. Not only it's on the website as well. The course is on the website as well. Of course, you're gonna need a password to access it, but it's on the website as well. But it's also on Mega. And the reason why I do this is because sometimes I know Mega gives people a hassle with like the whole free space thing. So I just made it on the website to the point where you guys don't have to deal with that. Long story short, today we're just going to talk about entries and exits. To me, it's the most important thing as a trader. I actually just called out a trade on my group for US 30. I don't trade this pair like this. And I don't like trading the pair like that. I think anyone who knows me and who knows how I trade, you'll know that I don't trade US 30 that much. And the simple reason why is because there's been a lot of manipulation, last year, including this year, the whole COVID, whole presidential election, job employment rates going up and down, fluctuating. The economy right now has just been definitely, sporadic and erratic. So the market's been doing the same thing, sporadic and erratic. So I personally been staying away from US 30, and I just been trading gold and, sometimes NASDAQ. I'll trade NASDAQ sometimes. And yeah, that's pretty much it. I've been having, real tough times trying to fortify my strategy as far as mastering US 30. Now, I'm not saying that it's not possible to get, the accuracy back on trading US 30, but right now I'm just focused on gold, and I'm focused on my gold PDF that has actually just been released. Part 2 of the video is actually coming. So that being said, guys, of course, when it comes to trading, guys, you guys have to take it very seriously. You have to take it as a career. And if you don't take it as a career, you'll never actually be successful doing this. And that's something I have to tell myself, because I caught myself just nickel and diming still, trying to get fast results, getting mad at myself for blowing accounts when in reality I wasn't doing the proper work, proper education, and the proper work on myself, my mind, and my trading, because that comes down to all of it. You have to have the mindset. Sorry about that, guys. One of my students texting me. I'm always texting students, always interacting with students. That's a different thing about me and your mentor, is that your mentor is not going to call you. He's not going to text you. He's not going to check your trades. Most he'll do with you is just have an online webinar with 40, maybe even more students. And half of the time, you don't even get your questions answered. I'm not saying all of them are like that, but I do know for the most part, that's how most people are teaching trading nowadays. So, you know, there's a lot of benefits for trading with us. You get one-on-ones with me. You get to call me anytime you want. You know, to me, in my personal opinion, you can't beat that because, like I said, with trading, it's more or less of who you're trading with, you know, rather than the skill itself, because the skill itself is going to come, I feel like, as long as you put the time in, as long as you're consistent, as long as you have the grit, it's going to come. But how fast do you want it to come is the question you have to ask yourself. How bad do you want it and when do you want it? Because with trading, it can become a long journey, or you can make the journey very short by just getting the right mentor and actually fortifying your skill. So that being said, let's jump on it, guys. Entries and exits. So first thing is first, guys, whenever we're looking at the market, we want to get a good idea of what trend the market is in, what direction is it going, where is it going, what's the major zones for the market. And right now, ever since the presidential election on November 4th, we can even go back here. November 4th, you guys can kind of see already, look, that was like the peak of it. November 4th, everyone thought that, well, US 30 was going to skyrocket. Crash. Everyone thought, yeah, let me actually box this out. That way you guys can see what I'm talking about exactly. So from October all the way to like maybe, I would say, 4th, yeah, 4th through 5th, maybe, through the 4th. So right here is when everyone thought the market was going to sell like it did last year, and it did that crazy drop all the way to 18K. You guys can see it went all the way to 18K. So everyone was expecting that this year. Not gonna lie, I was as well. When everyone's seeing that price kept struggling to make highs. You see, first attempt high, didn't make it. Try to make another attempt high, it didn't make it, came back. Did another attempt, it didn't make it. And this was what everyone kind of had an observation of the fact that the market might actually turn around. And you can see here how price made that double top here. You know what I mean? That double top, head and shoulders, wherever you want to put it, it's there. As long as you recognize the pattern, guys, or the trend and then the pattern, of course. You guys can see how price rejected this. And not only it rejected it, but it rejected it numerous times. So you got your reject right here, you got your reject right there, you got your reject right here, came back, made a head and shoulders right here, and then eventually came up to finish the double top, and then price dropped, but then reject. To me, a rejection at this zone, you wouldn't be surprised if this is a 618 zone or a 23 zone. Let me drop my fridge in a minute. Since we are still technically in an uptrend, so we'll go from this move. Ooh, it's not fibs. Sorry. So we'll go from this move all the way to the high. You guys can see how price came, touched the 618, and then didn't make it. So that to me is my clear indication of price either wanting to reject or come back. Now, the minute price came here, touched the zero area, and didn't complete the sell, that's a clear indication that market has a quite potential of reversing out. Let's say if you were just looking at just this move, and you didn't see this here, you were literally just looking at this. You want to draw your fibs since it's now on a downtrend. You want to draw your fibs from here. So 0 at the top, and it's always the opposite for an uptrend. So you guys can see price came up, came down, okay. I'll say pretty much along the lines of the 786 area, where is basically you would want to think if you were buying, if you were having your set intentions on buying anyways. But like I said, with a move like this is a clear indication that price rejected after it didn't make a full sell. Now, for me, if this was going to be a full sell, it would have to come here, come back and retest the low. If it came back and retest the low, don't break the low and keep continuing down. Okay, we are officially in the downtrend. But what did price do? It did completely opposite. It went, came down, and then go back up, came back up. So that was a clear indication that yes, there is not anywhere near a downtrend yet. Now, it could still happen. Don't get me wrong. With the way the economy is right now, I'm pretty sure Dow dropped like maybe 200 points within the last 2 days. So it's still possible of, you know, Dow Jones coming back to that downtrend. But for now, we are in an uptrend. So always, guys, follow the trend. Don't be that guy who's always trying to catch trend reversals. I used to be that guy who always tried to catch trend reversals. The problem is when you're trying to catch trend reversals, the likely chance of market turning against you is very high. So I don't like trading trend reversals like that unless the market either made a higher high or a higher low, whichever direction the market is in. So that's just how I trade. I trade trend continuations at all times. Now, don't get me wrong, there'll be times where I'll catch the counter trend, I'll catch the reversal, or I'll catch the retracement. But the majority of the time, I am catching the continuation on the trend. So that being said, I know you're like, well, why did you sell just now? I'm going to show you guys why I even sent out this signal on a sell. And what is my take profit area? Why did I take this trade? What am I expecting from this trade? So we can look here. Okay. Let me actually put my indicators back up. This is a stochastics indicator. I don't really use indicators like that. And the reason why I don't even have videos on indicators, guys, is because I just don't use them like that. And I recommend everyone to trade without indicators. Naked trade is the best way to trade because you're doing nothing but chart work. Indicators either lag or they're too early. And the best way if I were to trade indicators all the time is through divergence. Like that's really the only reason or only confirmation I look for, or oversold or overbought. Otherwise than that, in my personal opinion, I just don't have the time to try to keep, you know, messing with indicators because in reality, they just give out false information. So I try to stay away from that. But anyways, let's take a look at this trade. Price actually just went up a little bit against our take profit area. So I might take profit early on this trade. So people are like, hey, why did you take this trade? My first reason why I took this trade is because I seen that price is basically making a channel, but a descending channel. You guys can see that. So prices kept bouncing in this range. So in my personal opinion, I already knew if price is gonna retest here, which it already did, I was waiting for that retest to happen. This is initially where I caught the sell. I waited for price to continue making lower lows. So I was watching it all morning. I see, oh, price came here, didn't break it, came here, didn't break it, came here, didn't break it, came there one more time, and that's where I got my entry on the 5 minute. So my entry was here. Really, my take profit is here. So let me go ahead and draw this for you guys. So this is how my trade setup would look. Now, not that much pips. Personally, it is somewhat of a risky trade because price can turn around and touch the stop loss at any moment. But the reason I caught this trade is because I knew it wasn't going to be a long-term trade, number one. And number two, price hitting that area has a very high chance of happening just because of the simple fact that price is still in a channel. So when US 30 tends to be in channels, it tends to always do one thing that most people don't notice is it sells a lot anytime it's in a channel. It actually sells more than it buys when it's in a channel. So my trade positions are safe. Now, don't get me wrong, if price comes up here to maybe 70 or 3,100, then maybe that's when I'm probably going to take out my positions. But for now, I'm still in profit. Nothing to complain about. I'm not going to trip on it. I'm just going to hold my positions. And if the market does, like I said, turn around, I'll just close it. But for the main part, the main reason why I took this trade, guys, was because it was a continuation of a channel, and the channel is still descending. Now, don't get me wrong, if I start to see higher highs and higher lows, of course, I wouldn't want to sell it. Because like I said, guys, I always follow the trend. I don't do anything else but that. And to me, that's the most simplistic way to trade. Most people, here, let's look at a quick example. Most people will be that person who will try to catch the buy right here. Now, this is actually a smart buy. I'm not gonna lie to you guys. This right here is actually a smart buy. Very smart buy. But I'm gonna show you why sometimes trying to catch reversals just doesn't work, and it's not the safest. I always use my line chart. Always use the line chart first. Map out your positions. Check out the zone, and this is obviously a clear zone. Price kept bouncing from this zone. If we use our fibs, so since price is still in an uptrend, we go to the recent low, to the recent high. Oops, recent low to the recent high. So you guys can see that price is pretty much bouncing at the 23 area. And anytime price is bouncing at the 23 area, it still has potential to come back down to the 100s level. For it to be a strong buy, it would obviously have to come to the 50 area, which is right here. You know, it would have to come here, retest this zone, and then come back. Here, let me show you what the buy would look like if it were to happen. It would have to come here, come back, retest here, and then of course break here for it to be a buy. And then obviously retrace at the 618 if there's not enough buying pressure. If there is enough buying pressure, it's obviously going to go all the way to this zone, which is right here, So, but just looking at it, price right now is struggling. So what I think it's going to do, exactly this. It's going to form that, and then it's just going to come down back to its downtrend. But I could be wrong. Like I said, I could be wrong. But just my perception of the market right now, with low liquidity, I think that's what it's going to do. But like I said, don't get me wrong. Price can still actually come all the way up and hit my stop loss. But just looking at this pattern, I always trade in patterns and double tops. I think it's the most easiest, simplistic pattern you can trade. All you have to do is either wait for the top to be touched or the bottom. You can with this type of trade, I mean, you can only go two ways. You either cash it at the bottom or you cash it at the top, wherever you feel comfortable with. Me personally, I like cashing it at the top because the top, all you have to do is just wait for a lower low, okay, lower low continuation, okay, wait for that lower low to initiate, wait for the 15-minute. Like I said, I always wait for 15 minutes or 20 minutes or 30 minutes on my time frame. So let's say right now it's 9:44. I would technically wait till like 10 o'clock, 10:15 to enter a position, because at that time, let's go back to the candlesticks. At that time, this candlestick will finish form by that time. And you guys can see lower time frames. The only reason why I use lower time frames is more for entries. I don't trade lower time frames because you don't make money trading lower time frames. I mean, you can. I know a lot of scalpers out there. I know successful scalpers. I kind of do all of it. I scalp, I hold, I swing, I intraday trade, and do it all. It just depends on the market environment. That's why it's always important to know your market environment before getting in it. So knowing what other zones, what are news coming out, economic reports, is there a speech going, stuff like that, unemployment rates, and of course correlation to the pair you're trading. So like what pair moves with this, what pair doesn't, you know, stuff like that comes in handy when you want to get in a position. Don't just get in a trade blindly and then hoping the trade will go your way and then get mad that it doesn't, because in reality it takes a lot of confluence and confirmation for me to even get in the trade. Now, like I said, the reason why I got in this trade was numerous reasons. I've been watching this trade since last night. I was actually in a buy on NASDAQ, and I know somewhat that NASDAQ somewhat moves with US 30, and NASDAQ has been struggling to buy. So to me, that's a clear indication that price might, you know, actually keep going down before buying again. So that's kind of the main reason why I decided to sell US 30. And of course, looking at the news, there's been a lot of news towards the downside that price can still keep going down. And another thing about news, guys, is be careful what type of news you're reading. There's so many news companies out there, websites out there that you can learn from. Personally, the one I like the most is FOREX Factory. I'm always on FOREX Factory. FOREX Factory, FX Street. These are just the few that I use, and I think those are the most accurate. Everything else tends to be either a little late or a little too early. It's usually a little late, so I go for FX Street and FOREX Factory, because FOREX Factory has news throughout the whole weekend, so you can basically know what to look for. And that's actually in one of my videos in the course. I forgot which video it was that goes down and talk about news events and all that. But for the most part, I'm gonna watch this trade with you guys for a while, and I'm gonna see how it turns out. Just to show you guys a quick glance of how US 30 is doing. I'm just gonna watch this trade, guys. Let's look at my entry. Let's look at my entry. So my entry was 3035, well 45. So I got in around here. Was really my target. So really, I'm not gonna lie. Like this is actually kind of a bad entry. It's not you know bad, but it's not the best entry. I could have had a better entry. I was really waiting for this to go back up, but I didn't see price trying to come retesting. Now here's the thing about US 30, it could still come back up and actually retest this at any given moment just because of the manipulation. You know how US 30 is, but I still caught half of the sell. and I still was in profit. I think I'm up like 200. Let me check, guys. Yeah, 200 USD. I'm up right now. That's from getting like 3,045 to 3,000, of course. 22. On my chart, it actually says 11, but check your broker. They always have different price fluctuations. I don't know why that is, but it's looking like I might be profitable in this trade for a little while. It might look like that I might have to close it early, and just because of the simple fact that I feel like I got in the sell too early. Not only that, this is not even the time I trade normally during the day. I mean, London session is already over, so I don't expect my trade to hit. And I know that sounds so unprofessional. It's like, well, why do you take the trade if you don't believe in it in the first place? I actually did believe in the trade, but my trade this time was actually more 50% trade. It was more of a 50-50 trade. And the main reason why I went for it was because of the simple fact that I actually wanted to test out the strategy that I've been working on, basically just trend continuation entries. So we'll see how this trade do. I'm going to actually step away from it for a while, and we're going to move on to gold, and I'm just going to let this trade play out, and we'll see how it goes. But for the most part, let's move on to gold. My favorite pair of all time. This pair can definitely be a headache sometimes if you don't know the psychological levels. If you do not know the psychological levels in gold, you will have a hard time trading it, just because of the simple fact that gold tends to have a lot of psychological levels. You just have to be the person to know which one it is. So, caught out a few trades on gold this morning. The first trade I called out was two sells. Well, yeah, two sells twice. Both of them hit the same TPs. Really, I wanted to catch the sell at 1870. 1870 was really my entry area I was looking for to get into, like really right here. Really right here was where I was looking to get into. But I fell asleep and I kind of missed my entry. So, that didn't happen. But I knew, since I'm so used to gold, I'm so used to the psychological levels, I knew that gold was going to keep going down. And let's minimize this trade real quick. You can see how last week we caught that buy. Everyone caught that buy at 1760. And we had some type of stallment at 1840. Another psychological level. You guys can see. I don't need to map it out for you. You guys can see. This was also a zone. So 1840. So I have it there. 1840 was also a zone. And when I seen that price was going to keep buying, because if we minimize and really look at the structure, let's use the line chart real quick. Okay, when we seen that price went all the way down, they tried to go below 1760, and it couldn't. You guys can see it just couldn't break that 618 zone. We already know this is a 618 zone. It's a 6 level. That's another thing too. Like I said, when you guys get used to fibs, you don't really need to look at fibs all the time because you're naturally already aware of your psychological zones. You don't really need to look at your fibs all the time. But it's just good to know, give you better confirmation and give you more confidence in your trade and to execute the trade. So we knew when price went all the way down and it didn't break 1770, 1760, that price was going to reverse. Now, anytime when price reverse with gold, it's going to be a crazy reversal. I don't care. It always makes crazy reversals. Like gold always makes crazy reversals. Like look at this one. Look at this one. Okay, look at this one. Okay, look at, let's find another example. See, the price came, sold, bought, sold, bought, sold, bought, all the way bought. Like this, it just makes a lot of crazy reversals. So I'm already knowing anytime that price hits a psychological level and it doesn't respect it, it's gonna hit a crazy reversal regardless. So we knew, okay, let's actually take some of this stuff off the screen so I don't blind you guys here. So we knew, okay, that price came here, 1760, it didn't break it. Obviously, what is it going to do? It's going to buy to what's our next target area, obviously the recent low. You know, the recent low, the last support, which was obviously here, the 18 area, 1830, 1840, 1850, 1860, even 1870, because price really didn't stop buying until like 1890, and that was what, last November. So we obviously knew, okay, obviously with the economy right now, I'm not expecting gold to tank yet. Everyone's like, oh, gold can sell, gold can sell. But if you know your pair enough, and I know my pair enough right now to know economically wise, gold is not going to tank because the dollar is obviously still depreciating. If you look at the dollar, it's still depreciating and it still has ways to go. That's why I have this red line here. I don't think the dollar is going to stop until it actually touches this red line. Look at the accuracy on this, guys. Look, I said the dollar's going to come up. It actually didn't make the double top, but it still went down. Still went down the way I was expecting it to. Now look at this. How accurate do you think that move will happen? Or how likely do you think that move will happen? It's 100% likely. It's actually 100% likely. People are like, well, how is it 100% likely? Not even 90. No, with the dollar, it's always 100% likely because the dollar right now is depreciating. It's 100% going to be that way until the banks, the economy finds a way to back up the dollar. And right now, nothing is backing up the dollar. Nothing. And people need to keep that in mind right now. With all the Fed rates, all the Fed cuts, and all the things going on with COVID, the dollar's going to keep depreciating. The more the dollar depreciates, the more gold depreciates. So that is enough confirmation with me to hold my buys when I got in at the 17 area, holding it all the way to 18. Of course, obviously, till the 618, and you guys can see, even if I drew it out here, let me use this. Let's flip this because this is an uptrend now. Let's say we were looking at this, okay, all the way to the high. Yeah, let me delete this. I got too much stuff on my screen, guys. I apologize. I usually map out my my picks for the weekend, my trade setup for the weekend. That way, I don't have to do anything. So we know, okay, obviously, price hit that low. Hit that low right here. Whenever price hits a low on gold, it's gonna hit the most recent low on a buy. Like if it starts buying, it's gonna hit the most recent support, the last support, should I say. And obviously the last support was around the 1860 area. And that's exactly where price came. Retest made that somewhat of I would say somewhat of a head and shoulders. And then obviously it came back and reversed all the way to 1820, I think. Let's look at the line chart. Another psychological level. So let's take a look. Well, it actually didn't touch 1820, but you guys can tell it did. What happened is they just wigged price back up to its original price, or its demand price, should I say. Sorry about that, guys. Always texting students, you guys know. Always keeping update with my students. So yeah, when we seen that price came back in, honestly, looking at gold and the bullish strength it's having right now. I mean, the bearish strength it's having right now. I personally think price can still come back down and touch 1770 one more time before its bullish run. Now, here's the thing. With gold, we always know that the possibilities are always there because gold is a very high liquidity market. It can do anything at any given time. So you guys can see how I already have my maps, my direction pointed out for the upside. But it could also do this. But with those wicks being there, that's straight rejection, guys. This is straight rejections. And all my entries are based off wicks. So when I got in this buy right here, I got it in a wick area. I actually didn't get in until like right here at like 1790, 96, somewhere around there. I forgot. I would have to go look back in my trades. But I always get in at wick areas. And the reason why I do is because you never go wrong with the wick areas. Anytime price is wicked out, that means rejection. That's just straight rejection. So wherever the price it was currently at and it's wicked at, that's where price is having a hard time getting through. And let's take a look at US30 real quick. It just actually went up a few pips. But it gave us a rejection. So look, you guys see that rejection right there. So in my personal opinion, I think it's going to come back down. We basically manipulated up a little bit right here. Now, don't get me wrong. Like I said, with US30, it can still come up here. But for now, it's probably going to come back down and try to touch my TP. But back to gold. Anyways, so I personally think if price were to even try to come back down, it would have to break this level right here of 1820. Now, if price breaks 1820, that's an entry. My entry is 1820, point blank period. So my entry would be right here. What I would wait for is I would wait for price to literally do this right here. I would wait for price to go up, retest the zone on a sell, and don't break it on the buy. Because here's the thing. People will try to get the sell right there, just right then and there. They don't wait for the manipulation. They don't wait for the retest. They don't wait for the stop hunt to happen. They just get in the shit. And then you wonder why you're down 40 pips or 50 pips and drawdown just to get the right entry. And even when price starts coming your way, you're already 30, 40 pips and down. So even if the market does come your way, you're not even in profit because you decided to get in the trade too early. So it's always good, guys. Wait for that retest. I'll wait for a retest right here with areas. Wait for a retest right here. Now if price comes right here, touches it, and then potentially I'll sell it maybe all the way down to here, just because I know this is a level, 1790, or potentially right here. But in my personal opinion, I would take profit right here just because it's at the 78 level. And the 78 level still has a strong signs that it can reverse at any time, especially with all these wicks here. Always look left because the market will always tell you what's going on. I mean, right, sorry. Can't look left. Well, yeah, that's what I meant. I'm thinking vertically, guys, sorry. But yeah, always look left. The market will always tell you what's going on. So that's a good way to look at it. Take a look at, I think yesterday just froze for the time being. It usually freezes around 3 o'clock every day. So I think that's what just happened. I think that's exactly what just happened. So I'm going to probably have to pause this video until the market is back open. So I think that would be potentially smart to do. But yeah, so I'm going to pause this recording and then we're going to get back into it later. Okay, guys, so Market's back open. I'm already going to close this trade. I'm down $20 on this one, so I went and closed my positions. Always cut your losses short. Now here's the thing: this trade is still pretty much still in the works of. Well, it can still happen. The trade setup can still happen at any moment. Like I said, I've got in this trade and learned it early, even in the last video. Well, not the last same video. This is the same video. Well, before we went into our pause, you guys heard me say that this trade might not work out. I was really testing it. It was really more of a test trade. At the end of the day, I closed my positions. I didn't stay in it, and I'm not going to. But as far as this trade idea, I still believe this trade idea could still hit 2,950. And that was originally my trade idea. So if I want to get in it, I want to wait for lower lows. Right now, it's looking like it wants to do that. In my personal opinion, it would have to come here first on the 32 level, and then probably retrace back down. But just looking at it right now, like I said, it could do anything. That's why I got out. No reason to wait for your trade to turn around. I think that's the stupidest thing people can do is when they stay in a trade that's not running. It's not in profit. You stay in a trade that's not in profit. You're really trying to test. Okay, should I stay in this trade? Should I watch it? Honestly, guys, anytime you are in negative, if you are not expecting it, let me say this again, if you're not expecting drawdown, don't stay in the trade. It's the dumbest thing you can do. Look what I did. I've got on my positions, and I did the right thing. So if I want to get back in this trade, I would potentially wait for price to do this. Here's what I would want price to do in order for me to even want to get in this trade, because we all know how US30 moves. So if I want to get in this trade, I would wait for price to do this, break my stop loss, of course, stop hunt, come down here, oops, and then come down here, retest this zone right here, the top of the wick, and then break it. Once it breaks that zone, then I'll know for sure it is a full-on sell. Now, don't get me wrong, it still could sell right here. It still has potential to sell right here. But since I already missed my entry, I'm not going to go ahead and force it. So this trade setup is basically done for the day. I'm not going to take any more trades. And I'm going to tell people on my group, if they want to take this trade, they want to hold it, they can. But I'm getting out. No reason to do that. I'm going to tell people to close this trade. Now, you're like, well, Tyrone, it still has a chance of turning around. Why not hold the trade? Here's the thing. If you have a 100K account, I would tell you go ahead and hold this trade. TP, typically, I would say anywhere from here, from 360 to 390. Is your stop loss, sorry, not TP. Stop loss. Your stop loss would be from 360 to 390. If you want to take this trade and you have a large amount of count. Now, the account that I took this trade on was actually on the 4K account, so I'm not going to go ahead and risk that. I could, but I'm not going to, just because it's not my trading criteria. Why is it not my trading criteria? Well, there's no lower low being made, and it's actually trying to go back up right now. So me trying to sell it right now would actually be stupid, because price still has a chance of going here and lingering here first before selling that. If I were to want to take this trade, what would I look for? Like I told you guys, either the retest here, or we could come here and make that lower low. Once we have a lower low around this area, the 40 area, really right here. And why is that? Because this is obviously the zone where price is struggling at these weak areas right here, and it's at the same place where it's struggling at. So if I see price breaks this zone, come here, breaks the wick area zones, obviously it's going to sell. But if obviously it's still holding up here with a bullish candle, look how big that bull candle is. Oops, sorry. Let's go back and look at this. Look how big this bull candle is. Very strong bull candle. So in my personal opinion, this bull candle can still come up here and linger all the way to 60 or 70, and it's actually already at 60. So I don't doubt that it's going to touch 70. So that is just some of my few entry key points. Let's look at some more perfect entry setups. No setups here. Markets is really kind of choppy right now. Most setups right now, if anyone's going to be getting them, it's more, you know, scalps, intraday trade. You can't really hold any trades right now just because the market is not stable. Like I said, the market's not going to be stable until this whole election is over with. Euro right now it's been trying to sell for like the last 3 days, and I know this for a fact because I tried to sell it. I mean, I tried to sold it, didn't work. I sold it. I was in profit for a while. Then obviously price reversed back up here, and then I started to buy it around here actually, and then price came back and reversed. So I just took my profits. I took what I can, and I said I'm going to stay away. Anytime the market is indecisive like this, like look, the market right now can do about anything. It could go up or it could go down. And until I get a clear idea of what's going to do, I'm not going to touch it. I'm not going to touch it. I'm not going to look at it. So if I wanted to buy, what would I look for? Okay, come here. We test down here. If I wanted to sell, what would I want to look for? I would want price to come here and come back down here on the sell. That's really just the most simplistic way to trade. It's just wait for that retest, wait for that initiation pullback to happen. No pullback, no retest, no trade. And that's kind of why I even told you guys, like the US 30 trade call that I had, I wasn't too confident in it just because of the simple fact that it didn't retest yet. And it was having a struggle, a hard time trying to break down to the downside. That's the main reason why I got out with a $20 loss rather than, you know, taking a bigger loss. Because look what the price is doing right now, exactly what I told you guys I was going to do. Go for that 3,060 area. I mean, 70 area really, maybe even 90. So it could definitely keep going up for a while before it actually sells. Let me remove some of this stuff off my screen. Personally, I think price could still come up here all the way to 3,135 because that's also a level. You draw this here, right here. Right is a zone. Touch. And then obviously right here as well, this is a minor zone. Not really too much of a big zone, but it's a minor zone. I call these minor zones because, I mean, of course they did break, but it's still there. The zone is still there. We can't ignore it. So you guys can see touch. Price is still technically making downtrend on the lower time frame. So price can still, like I said, it can still come down, but it would have to have a retest and a lower low break for it to keep going down. But right now, I think price is actually trying to reverse and look for a psychological level where it could either drop back or keep buying. In my personal opinion, I think price could either come touch here, or if it really wants to fuck around, it could actually break this zone like it's been trying to do since this morning. So that's my take on it. Always look at candlestick patterns. Look at the strength in the patterns. Like look at how many candles there is. I'm actually going to make a video about candlesticks and how to identify strong trends when they're coming. But typically, with a candle like this, a big candle like that, I personally think the market is going for a bull run, just because you got your bullish engulfing right here. You got wicks towards the downside. So obviously this is rejected, and it started buying. So my personal opinion, I think it's going to go up a little bit before it comes back down. But that's just what I'm looking at for now. And if it does break, it's going to break, come back, retest, and then keep buying, of course. But if it doesn't, it's probably going to retest and then come back down. So that's my take on US30 for now. I'm just going to go ahead and save this, and we're going to move on to better things for now, because US30 sometimes give me a headache. But more entries. So this right here is a perfect entry. Trend continuation, somewhat of a channel. You guys see, okay, see the touches. Line. You guys can see. I would say this is more of a rising wedge, personally. Could be wrong. You guys can see it's still on the rise. Technically, looking like prices is going to sell just for a little bit. It could do this. I think it could do that. I think it's bound to do that, and then maybe go back up. Or price could really just come about right here, and then from there it actually takes off from there. So that's what it could do. It could take off around either here. It can even take off here. But just looking at it, personally, I do think that New Zealand dollar is going to retrace before it keeps going back up. Overall, the trend is a bullish trend. If we look at the higher time frames, like I said, guys, I make trading very simplistic on myself. You don't need to make things too complex. Just have a set of rules and stick to them. Don't cross them for nobody. Don't go against your plan for nobody. Don't go against your plan because someone else is catching more pips than you are. So you're like, oh, let me go ahead and do what he's doing, and then blow your account. Yeah, to me, that's the worst thing you can do, is just try to go mimic somebody, and it doesn't work out as planned. So always just stick to your way of trading, what fits you. And of course, we all can learn from everyone, but learn in a way where you're not 100% copying the person. Learn to the point where, okay, you take some set of rules and you make it into your own, rather than, I'm just going to take how he trades and just go run with it, not even back testing it, not even on the long term realizing that it actually has a very high accuracy. Like stuff like that, you need to test out your trading plan. You need to. It took me about 6 months to have my trading plan strategically to the point where I was making about $200 USD. When you have a plan, the trading plan that's making you about $100 to $200 daily, that is where you start getting success, and that is enough. You see, a lot of people think that they can just come in here and start having $1,000 days, $2,000 days without even getting through the $200 days first. You need to have the $200 days first in order to have the $2,000 days. Because if you can't make $200, what makes you think you can make $2,000? You know what I mean? So it's just some things to think about as far as being a trader. Always stick to your plan and make sure your plan has a high accuracy. I mean, even 60%, guys. Because the thing that people don't understand is you don't have to be right all the time, and you don't even have to necessarily be right more than you're wrong. You just need to be right enough to the point where your trades risk-reward ratios are high enough to make back what you lost, or to make enough for your account to grow. As long as you're making 2% daily. Like I said in all my videos, you're good. 2% daily on a $1,000 account is really about $150, $170 daily. So if you're making about $200 daily, That's good. If you're making 150, that's good. Even if you're making $100, still good, because you guys have to understand there's people out there in today's world, especially right now, who's not making that. So you have to be blessed with what the market gives you, because sometimes the market is not even going to give you anything. So you have to come in here with a strategic mindset of, I can make some money, but I could also lose some money. It's both situations. Don't always come in here and think, oh, I'm going to win, I'm going to win, I'm going to have winning trades. Winning trades happen, but bad trades also happen. You need to be ready for those bad trades to happen, and you need to have a set rule of, okay, I lost four bad trades. I have 4 bad trades in a row. I'm walking away. Or I lost more than 2% of my account. I'm walking away. Or I lost even 5% of my account. I'm definitely walking away for the whole weekend, because that's 5% in my account. There's no reason why I should come back the next day and try to make it, because naturally, when we lose, people don't know this. When you take a loss, you're naturally going to be in the mind state of making your money back at all times. And trust me, take it from experience from a guy who's been trading for 2 years. It will be 2 years after this year. But take it from a guy who's been trading for long enough to tell you that anytime I take a loss, or I used to revenge trade. I used to trade based off that loss. Like I would lose, let's say $200, $300, $400, and I would say, oh no, I need to make that money back, and I will not stop trading until I make that money back. But here's the problem: I don't make the money back. I lose actually half of my account, and that's what makes me stop trading. You don't want to be that person. You don't want to be that person to go through the trials and tribulations I went through. That's the reason why we're here. It's the reason why SNIPER4X was created, for you not to go through all these things that I went through. I'm actually here to help you shorten that curve. So my personal opinion, never ever let your account drain to the point where you're gonna regret it the next day and you're gonna have a hard time making the money back. Like, ask yourself, if you lose this today, before you even keep trading, if you lose this today, am I gonna be okay? Am I gonna sleep at night okay? If you are, go ahead. If you're not, you're gonna bitch about it, you're gonna stress about it, and have a bad day and take it out on everyone else. Just stop trading. Stop trading. Go out with something, get a drink, like just do whatever, grinds your gears. But this trade setup right here, it was a trade setup. Like I said, I did take a few days ago on the buy and the sell. I caught the sell at the top right here after it made its head and shoulders pattern. Let me go ahead and draw this out for you guys. Always good to spot the patterns, guys. Always spot out the patterns, spot out the trend. Yeah, it's just the first step to becoming a better trader, is to just know where. Yeah, let me do this instead. So, head and shoulders formation, W formation, whatever you want to call it, bat formation, W formation, it doesn't matter. As long as you see the pattern is there, you recognize it, and you know how to trade it. So how to trade this pattern particularly, since it is in an uptrend, we are still in an uptrend. The price is still making somewhat of, well, it's not making technically higher highs. It's really in a channel right now. You guys can see, look, same zone, same zone, same zone. Really no highs or lows. So this is, to me, a channel. And channels, to me, are easy to trade. You just have to wait for your top or your bottom to hit. You just have to wait for those zones to hit. That's why I tell you guys, trade by zones. Don't just get in the trade. It's the most stupidest thing you can do, guys. And always remember, whatever you want to get in the trade at can always get manipulated. So before you even get in on a trade, look at the zone. Look how strong the zone is. Okay, let's look at the zone right here. This is obviously a high. We never touched this zone before. We actually haven't touched this zone. Yeah, let's see. When was the last time we touched this zone? Last time we touched this zone was back in 2018. March 18, 2018 was the last time we even got close to touching this zone. So we know for a fact, if I even wanted to get in on this trade, my potential of my buys or my sells, let's say if I wanted to sell, my potential of my sell could actually get stopped when it all the way to the last high. So you always want to keep that in mind. Always when you're selling, remember that last zone, last high of the market, it could look at it could actually touch that. So always look left, see what the market is doing before getting in on your sales. And I'm a big fan of selling. I'm actually a lot more accurate with selling than buying, just because selling is easy. You just have to wait for a price to drop, wait for that lower low close candle and a lower low, and you're good. See, my personal opinion, looking at New Zealand right now, if I wanted to get in on this trade, here's what I would look for. I already got my zones. I already know economically wise, there's no big news out for New Zealand this week, and I even show you guys. Go to FOREX Factory, one of my favorites. You can go on here, you can see there's no New Zealand news out, so it's safe for now. Now, don't get me wrong, this news right here can still affect it, but it's not 9:45 p.m. So guess what? I'm not worried about it. I'm not worried about it. I may be worried about it tonight just to see it might affect it in a certain way, but right now, I'm not worried about it. But anyways, back to New Zealand. So if I wanted to get in on New Zealand on anything right now, personally, I would wait for price to either come here, break it. But if price does break it, now, personally, I'm looking for a buy. If price breaks here, I'm looking for a buy. I'm not even looking for a sell at this point. But not, if price do come, let's say if it does this and it comes down here, and then it goes up a little bit, and even if it doesn't, I'm going to cash my sell around here. Yeah. Around here is where my sell will be at. We'd be like, well, why? It's not a good risk-reward ratio. It actually is. Because if you think about it, let's pull this out. Let's pull this out. Let's really pull this out here. I want to catch this trade. Stop loss right here. Take profit right here. And this is a channel trade. Okay, if I want to take this trade, my risk reward will still be $5.11. So I'm risking $5 to make 11 bucks. My personal opinion, that's good enough for me. My risk reward is always 1 in 3, 1 in 5, and 1 in 6, or anywhere around there. I'm never trying to make a 2 in 4, or I'm never trying to make a 3 in 3. Basically risking 3 to make $3. It's the stupidest thing you can do. You want to risk the least amount of money as possible to make the most amount of money as possible. Now, don't get me wrong, some people don't do this by either over leveraging or using the wrong entry, just getting in at the wrong time. So their risk reward tends to get a little bit hectic. Like some people will get in right here. It's still a good risk reward ratio, but what happens when the price reverses on you? And you forgot that the reason why a price reversed on you is because you didn't get in at the right entry. Therefore, you still have a possibility of price reversing. So that's why it's really important to just wait for that lower low close candle. Wait for that lower low close candle. Wait for a lower low on the trend or the retracement, whatever, and then sell it and then get in your entry. You don't ever want to just jump in on a pair. On the trade. But yeah, that's just my thoughts on this one. I'm going to go ahead and keep this one as well. You can see wick here, wick here. You got a head and shoulder formation right here, like I told you guys already, but this is on the 45 minutes. You can kind of see it more clearly now. So if I wanted to sell, like I said, I would have to wait for price to come here. If price doesn't come here, I'm not selling. There's no reason to, but if price does come here, I'll sell and I'll keep a probably stop tight loss, maybe to here. Ooh, went away. So let's do this again. Oh my goodness. Sorry guys. Peter is acting up today. Oh my gosh. Yeah, I don't know what's going on. My computer, I'm just gonna reset it. Refresh the page. It's just one of those days with this computer. Oh, good thing it saved it for me. How nice of you. So yeah, stop loss would be technically around here, but it would, like I said, price would have to come down here first. It would have to even like touch this zone here first for me to even want to sell it. Like I'm not selling until it reaches here. And of course, once it reaches here, my stop loss would be obviously up there, TP, right here. So that's really a 1 in 3 rate risk reward ratio, decent enough for me. Basically risking $1 to make $3, making $100. I mean, risking $100 to make $300. Those are the type of trade setups you always want to get in. Trade ideas you always want to get in. Don't ever want to, you know, try to risk the most to make the most. It's just to me, it's not the best thing you can do. So always map out your trades like that. And don't be afraid to get in the trade, guys. I know a lot of people are afraid to get in the trade. And if you are afraid to get in the trade, if you feel like the market is too sporadic, just bust out 0.02. 0.02 is how I always test out the market. I bust out the 0.02, see how the market is doing, because when you bust out that 0.02, if market reverses and go not your way, what are you losing? $5, $10, $20 if you have a crazy stop loss, which I don't recommend, because I recommend everyone having a 20 to 30 pip stop loss at all times. So if you're risking 0.02 with a 20 pip stop loss, you should only be losing about 10 to 15 bucks, no max, on any trade. So to me, that's just smart thing you can do. I know a lot of people who like over leveraging all the time, and there's times to over leverage and there's time to not leverage, over leverage, and I'll have a whole separate video on that on the course as well, on when to over leverage or when to not over leverage, because personally that's the most to me is the most thing that I struggle in, and I know a lot of my students struggle in as well. You just have to really get used to the market. You really have to get used to the type of trades you're looking for, the type of trade setups, the type of pair, of course, and the type of patterns you trade. Like me, I'll tell you guys, I always trade M patterns. M patterns are my favorite. That's the main reason why. If this does play out the way I want it to play out, I'm going to sell it. If it doesn't, no stress. Same with US 30. It was also an M pattern being formed. That's the main reason why I wanted to take it. But since, that is messing up as well, guess what? I walked away with $20, no stress. Some people would probably still be in this trade hoping that the market turned around. Like this would have been a perfect trade setup for you guys. Look, M, retest, broke, another retest, broke. I actually caught some of this sell earlier. So, it's just always, making things simple. You don't need to make, because trading already, guys, it's already hard. In my personal opinion, it's hard. Like a lot of people say, well, trading is easy. That's because people are not teaching you guys what you actually really need to know. That's because people are not teaching you that trading is all in the mind at the end of the day, because the skill itself is easy. And I personally think a baby can learn how to trade if the baby is taught properly how to trade. But the problem where a lot of people mess up at is the psychological part. They say 90% of traders lose 90% of their money within 90 days, and that all comes down to psychological. It all comes down to that at the end of the day. Because what's the difference between me growing a $200 account and you not being able to do it? It's the simple fact that you're not trading with the strategic set of rules, and you're not having the proper mind state in the market. Because in reality, there's been numerous times where I had to check myself and say, Cyrone, I just took this L. Like for instance, let's say back in the day, if I took an L like this on US 30 and I took that loss, I would be that guy who said, well, the trade setup still looks good. Because if you look at it, my stop loss really hasn't been triggered. It really hasn't. Like, look, my stop loss is right here. really technically right here. So like most people will be like, well, my stop loss didn't get hit. Why not get in again? Now, like I said, I can still get in this trade if I want to. I haven't had 4 losses for the day, so I can still technically get in this trade. Why am I not going to do that? I'm going to tell you one reason why. I'll tell you one reason why. I'll give you guys a reason why here. Because if you look overall, price is in an uptrend. Even though it's making channels, price is overall in an uptrend. So why am I going to sell it when price is over in the uptrend? Regardless, like people, why'd you take that sell in the first place? That sell was really a scalp sell. So the scalp didn't work. Why am I holding? Because scalping, you're supposed to scalp, right? You're supposed to take profits and dip. Obviously, the scalp didn't work. Well, it did for a moment, because I did tell you guys take partial profits in the group if you paid attention. Look, the trade actually worked. What happened is the trade actually just reversed. So me knowing, okay, I was in profit to not being in profit, why would I want to hold it? Why would I do that? The only reason why I would ever want to get in this trade is if price does actually push up, come down to the downside, and actually make a lower high. If it makes that lower high from here and it touches here, then yeah, I can sell it all the way down here. But until then, this trade is canceled. So get that out the way. And to me, guys, like, that's just how you should trade. You should make it very simple. Stick to your rules. Go over your journal every day. And limit yourself. How many trades are you going to take a day? How many trades do you want to take a day? How many pairs are you going to trade a day? How many, how much is your percentage that you're looking for daily? And I tell all my students, 2% is really all you need. Even on the big scale, like say if you have $100,000 to play with, you're making 2% of 100,000. You guys do the math. That's enough. That's enough money right there to pay your rent off for the month. You just made $2K from a $100,000 account. So why would I want to keep trading knowing that I just made 2K? You know what I mean? So it's just small steps, and of course, repetitiveness. Just doing it to the point where trading like the palm of the back of your head. And I always tell people this: you want to know your pair everywhere you go, even if you're at lunch, you're at Starbucks, so you're at work. You want to know where your pair is at without having to look at your phone, because you know for a fact that this is my pair. I trade it all the time. I know it psychologically. I know it technically. I know it fundamentally. I don't need to be checking the news or checking my charts all the time. Even though I do recommend everyone to look at the chart every hour. Every hour you should look at your chart to see what the market is doing, to see if there's anything crazy going on, news, stuff like that. You should always want to check the market every hour, just because of the simple fact. Look at this. The dollar is playing out the way we said it would. Downtrends. That's all the dollar been doing all year. So as long as the dollar keeps going down, that's good news for me, and that's good news for gold, because everyone knows if the dollar goes down, gold goes up. But gold, in my personal opinion, like I said, guys, it still has a chance of coming back to the 1700 area. That's just what I'm looking at. In order for it to keep buying, it would have to come back to the 1850, 1860. And right now it's looking like it's ready to touch 1820 lower. So we'll see how it plays out. But I'm going to keep it short. Entries part 2. I'll probably make a part 3 because you can never get better with fortifying your entries, guys. That's the most important thing when it comes to trading, is just really finding that right entry, either at the top or at the bottom. You don't ever want to be that guy who catches trades right here, even though you still have potential of making money in the middle. The problem is when you catch the trades in the middle, is you beating drawdown way too much, and who has time for that? So I think I'm gonna cut it short for now. Probably make a video next on trends, counter trends, and of course retracements. But that's it for now, guys. Hope you guys have a blessed day, a blessed year, a blessed life, and put God first. And I'm out.